QQQ was down 3.5% today, and after hours, it went down another 1%. Where could this market be headed? Are we headed for another big crash like we saw back in March and April? Or could this be quicker than expected? I'm going to talk about where exactly I think this market is going. I'm going to talk about a position that I went 93K in today, a new stock that I added to the portfolio, and then I'm going to go over 3 specific LEAPS and cash secured put opportunities if this market does correct further. So let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now, if we take a look at the account, you can see I'm down about 2.6% today, even though QQQ, which has most of the stocks that I'm actually in, is down about 3.5% or 4% after hours. That's because I'm selling options, okay? And we'll dive into exactly how I'm doing that. But let's take a look at my realized gain and loss. As you can see today, we closed out some positions to free up a little bit of cash, and I profited around $1,796, which is pretty good. Obviously, results vary day to day and month to month, but I'm not the only one doing it. As you can see right here in my private mastermind options trading university, we have 426 clients in here, all trading and sharing their inspiration. As you can see right here, this client sharing his inspiration today. Even though the market was down, there is ways to make money on both ends of the market, as you can see. Now, if you do want access to my Ryan's Trades channel and my LEAPS entries and exits, that'll be at the top of the description down below. Also, I do give away free trade ideas on my Instagram and my free newsletter, which are both down below in the description. So make sure to be subscribed to both of those because they're free. Now, let's go ahead and dive into it. What caused this market to crash today? Okay, Trump threatens massive tariff hike on China over rare earths dispute. Okay, basically he said, hey, we're going to increase tariffs on China again. Trump cited export controls that China imposed on rare earths from that country. And President Trump also threatened to cancel his upcoming meeting with the president of China, President Xi. Okay, so do we head further downwards, right? Let's kind of look at the macro perspective of where we are at in the market. We did see VIX, which is the fear and volatility index, creeping upwards as the market was making new all-time highs. So this was bound to happen. There just needed to be one piece of news that would send this market downwards. And if we look at the macro perspective, okay, number one, rate cuts. Are we still getting rate cuts? Because that is really what fuels these rallies in the market, what fuels a bull market, right? We saw where they hiked rates and we had a bear market in 2022. So right now, as we're looking at the CME FedWatch tool, it's a 97% chance we get a rate cut this month, October, okay? So that's already in the bag. December, these odds went up from 70% to 95%. So looks like we're getting another rate cut in December. So that's 2 on the way. Also, the odds for next March went up to 95% from 80% as well. So it looks like in March, we're getting a 3rd rate cut, okay? And then a 4th one midsummer, and then potentially a 5th one maybe by the end of the year or early 2027. So rate cuts are on the way. This is exactly what I saw during the tariffs crash. I said, hey, this might be a big crash, but with rate cuts on the way, eventually buyers are going to be stepping in because more liquidity, lower rates, businesses can borrow at cheaper rates, consumers can borrow at cheaper rates and spend more money. That money has to go somewhere and it chases assets, one of them being stocks, okay? So that is telling me, everything's good on the macro perspective. If we take a look at QQQ today, it kind of bled out and into the close, it even went lower. After hours, we're hitting 583, which is down another 1%, okay? So Monday most likely will be a red day. Usually we see this on Fridays. If we finish lower than we opened, Mondays tend to drop even further and kind of flush out. So we might flush out Monday and even extend it into Tuesday and or Wednesday before we even see a recovery. Now, obviously, that's probably the highest odds. Lower odds is, hey, President Trump announces something over the weekend to cause the market to rally. We've seen that happen as well, okay? But I'm not playing the market like that right now, okay? I'm definitely more cautious. Now, if we take a look at the macro perspective as well, we're taking a look at the 10-year Treasury yields. These fell off a cliff. That's a good thing for inflation, right? if we get inflation down under 2%, rate cuts are probably going to be more aggressive next year. All right, so this is good for inflation. People are fleeing to government bonds, 10-year treasuries, which is causing the yield to come down. Oil prices fell off a cliff as well, which is also good for inflation. Okay, so these are all positive things. Yes, negative in the short term as far as the markets coming down and us having to feel that volatility, but this is a good setup for a nice Christmas rally. Okay, S5FI, 36% of stocks are now above their 50-day moving average, which this is great. Things are getting a little bit oversold here, a little bit extended to the downside. Of course, we have some room to go, and I'll talk about that. Let's now look at QQQ and kind of get a good reading of where potentially we could head next week. Okay, so we're looking at QQQ. You see that we are approaching this, actually, we have breached the lower Bollinger Band after hours. As you can see, we have already breached the lower Bollinger Band. We're actually past this little point here. Let me delete that. As you can see, we have breached the 50-day moving average, okay? So things could get a little hot on Monday to the downside. So now that we breached this 584 level after hours, I think potentially we could be headed down to 570 as I'm filming this video. This is all happening right now. So this is gonna be a key area of support that I'm looking to get into a lot of stocks, all right? This is where, potentially we could see a breakdown too on the downside. Now, what would that mean? That would mean from all-time highs here, which was today we made all-time highs, we could see a nice 7% correction. That's exactly what we want to see to set up for a nice Christmas rally, okay? I told you last update video that if we continue kind of grinding higher like this with no pullbacks, right? The biggest pullback we've seen is like negative 2.5%. That's going to lead to a 10 to maybe even 15% correction, okay? So this is the correction we've all been waiting for. Now, do we go negative 7% or do we go even further? Odds are we're probably going to land somewhere between 570 and 580. That's probably highest probability there. But if we head further, potentially the max downside could be all the way down here to 552, which would be an almost negative 10% correction, okay? That would be a healthy, real correction, all right? So what I'm doing is I'm keeping cash available, right? As I talked about in the last update, I said, hey, I have close to 20% cash just in case the VIX does spike. Well, we have seen that spike here on the VIX. We got exactly what we were expecting. The VIX was trending upwards as the market was trending upwards. That's a divergence we haven't seen since before the tariffs crash. Okay, and I said, high probabilities are we spike up, and we did. Now, where do I see this heading? Probably on Monday, if we have a nice flush, we're gonna be somewhere between 24 and 28, okay? I can't call the exact top for VIX, but we're probably gonna shoot up somewhere in this area, which is gonna be a key buying opportunity. For a lot of people, it's gonna be very scary and people are gonna be selling, okay? But for us as contrarians in the market, we're gonna look at this as opportunity. And when you're selling options, this is the best time, okay? To collect the most premiums, stay safe, get far away from the stock, and potentially get assigned on good stocks. So that's what I'm expecting here. Let's take a look at the VIX cash allocation levels. So as you can see, we are now in the VIX 20 to 25. So fear is here, okay? And that's a good thing for us. 10 to 15% in cash. Right now I'm sitting about 16% cash, and I'll show you the portfolio. I'm ready to go. I'm ready to start buying, and I'm gonna show you exactly what I did today, why I entered in early today, and I started deploying some of this cash, and I'm gonna show you the new stock that I added, and then I'm gonna talk about, we're gonna dive into the 3 stocks where I see major opportunity, okay? So VIX 10 to 15, VIX 10 to 15% of cash, and then if we get above 25, I'm pretty much gonna be all in. I'll probably be around 5% cash. So those are those levels, okay? Now, let's go ahead and talk about the 3 stocks. Now, the first one right here is Robinhood. All right, this is my favorite stock, one of my favorite stocks in the portfolio. Unfortunately, the stock has gone up so much. I know I'm saying unfortunately it's gone up, but it's gone up so much that I feel uncomfortable being fully allocated to this stock, okay? Now, today's pullback definitely got me interested, all right? We're currently sitting at, apparently we closed at 138, but it's now post after hours 132. Okay, so I was actually, for this video, I was gonna say, hey, this is the zone, mid-Bollinger Band, right? Because this stock tends to bounce off that mid-Bollinger Band and go back up. Now, has it touched the lower Bollinger Band? Sure. And that might be something that we're probably not going to see lower Bollinger Band because it's so far down, but I'm looking at this 50-day moving average now, which is at 118, and that potentially could be an absolute bottom if we get like a 10% correction, okay? But I'm probably going to be looking to grab a LEAPS option on this on Monday. If we could get, I mean, I'm fine with it right here, but if we could get somewhere in the, let's call it 130 area, okay? So 130, between 130 and 125, I feel comfortable entering a LEAPS option there and then riding this thing back up for kind of a rubber band snapback trade. Okay, so this will be a quicker trade, but we're probably going to be towards that oversold on the RSI. We're probably going to have a bearish crossover on the MACD, but long term, I really like Robinhood. Okay, so let's take a look at the portfolio. All right, remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Let's take a look at the account. As you can see, I'm about $211,000 in cash, okay, ready to go. Portfolio just dipped under 1.3 mil. And if we're taking a look at Robinhood, I do have 165K worth of cash secured puts at the 127 level. So for me, I'm okay buying at that level. So if it does go down to 127, like I talked about, 127 to 130, I'm fine buying a LEAPS option to really lever up my capital and be capital efficient. So what I'm going to do is I'm probably going to go out, 2027, probably go out Jan 15, 2027, and just grab the 70 deltas. Okay. Right now, the 70 deltas are the 125 strike, which costs about $4,900 to control 100 shares versus paying $13,400. But, most likely the strike I'm going to be going with is going to be the next 70 delta will probably be a 115 once this stock does open up on Monday, okay? Now, to play this safer, okay, because, LEAPS are very risky. LEAPS are very risky, and I only allocate up to 10% of my portfolio to them. I like playing earnings. I like playing cash secured puts. So I would probably go out to November 7th, and if this thing goes down to 127, between 127 and 130, I'll probably just sell the 120s, okay? Right now it says I could potentially pick up a potential 4% ROI. I'll probably be somewhere around a potential 6% ROI, depending on where the stock's at. Results vary there, okay? But I like that 120 strike, okay? So that's kind of what I'm eyeing for the cash secured puts on Robinhood. So many levels there that I'm looking at. Obviously, the bottom would be the 50 MA, 50 SMA, but I'm looking at somewhere between 125 and 130. So anywhere in there, I'm fine grabbing the LEAPS. Now, Palantir, okay? Palantir is an interesting stock because you would think, because of the high valuations, the PE ratio above 500, that this stock would just absolutely sell off. The beta on the stock is like probably 2.5, 2.2, somewhere around there. So ideally, if QQQ was down, let's just say 4%, this thing should be down 8 to 10%, but it was only down 5.4%. And the only thing that I could come up with is, hey, they have a lot of cash on hand. They could weather a storm. The company is not capital intensive as far as what it costs to develop their softwares and to deploy them, right? And they have recurring revenue. So this is the type of company I feel very safe getting into, even though PE ratios are very high. So what I'm looking for is lower Bollinger Band for a LEAPS option. This thing's trading at 171 right now. Lower Bollinger Band's around 168. So I feel fine grabbing a LEAPS option here, okay, on Palantir, or even playing it safer and just doing a cash secured put, okay? So let's kind of dive into the portfolio and I'll show you what I have. Right now, we currently have $99,000 worth of cash secured puts on Palantir. But again, if I did a LEAPS option, 70 delta, I would go out Jan 15, 2027 and just grab a 70 delta, which would probably be somewhere around the 145 strike on Monday, okay? Now, if I wanna play it safer, I'd go to the November 7th for earnings. And, if this thing falls down all the way to 168, like we talked about, right, I'd probably go to the 160s and pick up As you can see, it says a potential 4.9% ROI. Results vary there, but this would probably be closer to 6%, a potential 6% ROI for these cash secured puts. So if I sell the 160s, I'll pick up, probably $700 to $800. And if the stock falls below 160 in 28 days by earnings, I'll be forced to buy 100 shares there. And I'm totally fine. I've owned shares at 160, so I'm totally fine getting assigned there. And I like Palantir. So that's going to be the second play. I like to look for stocks that are not only at a discount, because Palantir is not at a discount by any means, but it's resilient with where the market's going, okay? It's resilient considering QQQ is down almost as much as Palantir, okay? Palantir should be down 8 to 10, maybe even 12% at this point, like Robinhood. So I like that. Palantir's looking solid, okay? The next one's going to be SoFi. The third one's going to be SoFi. Again, lower Bollinger Band, LEAPS opportunity right here. It's currently trading at $25.95 after hours. So if we see anywhere between, let's call it 24 and 25.50, okay, that would be a LEAPS opportunity. Like here, that was a wonderful opportunity that my clients jumped in on, and then they rode it up and got out here, and now it crashed back down. You could get back in and ride this thing back up like a W. So I really like SoFi, solid company, online banking, more of a boring sector, and good upward trending chart. Okay, so this is what I'm looking at for Monday. If we go to SoFi, you'll see it's my biggest position in the portfolio, kind of a silent sleeper. We don't talk about this stock too much because it just kind of sits there and we collect our cash secured put income. So 186,000 in cash secured puts. If we go to the stock, again, I'd probably go out to Jan 15, 2027, and I'd pick up the 70 delta, which is most likely going to be the 22 strike or even the 20 strike. So somewhere around there, which would cost me about $1,000 to buy that LEAPS call option, okay? Versus paying $2,500 to control 100 shares. So that would be the LEAPS call. Or to play it safe, I'd go to, I'm personally gonna go to the October 31st for earnings, all right? And I will just go to the, 20 to 25 delta. So I'll pick up anywhere between a potential 3.4 to a potential 4.5% ROI in 21 days. Results vary based off where the stock's at, but that's most likely gonna be, I know right now the 20 delta says about the 22 strike, but it's most likely going to be probably the 20.5 strike or the 20 strike for a 20 delta, all the way up to the 21.5. Okay, so that's going to be my entries there. I really like those returns, and SoFi, I don't mind getting assigned at that point. Okay, so that's going to be those three. Okay, now what stock did I buy 93K worth of? Okay, let's go into it. AXP. I haven't had American Express in my portfolio in quite some time. The premiums on the options are too low for my liking as of now. Well, not as of now, but as of the past month and a half, 2 months. But now they're looking really good. They have earnings coming up next week. So I'm playing earnings, and I really, really like this stock. The reason I like having these kinds of stocks in my portfolio during downturns is because let's just say QQQ does kind of downturn to 570, 565, 560 maybe. These stocks tend to hold their own the best, okay? As you can see, AXP is only down 2.5%, all right, versus QQQ is down 3.4. So this is more of a blue chip, low PE ratio, 22 PE. I mean, this thing's undervalued. They have a recurring revenue business. I use the company, so I have credit cards with American Express. So I like the company, and it's a good long-term upward trending chart, okay? So if we take a look at kind of the past trend line, we can see potentially this thing could fall down to 311, all right? Now, what did I do today? Well, what I did was I actually went out 1 week to the 310 strike. So I have 93,000 worth of cash secured puts. So if this stock falls below 310 after earnings, okay, which it definitely could do so, the expected move for earnings is $17 plus or minus. So it could fall all the way down to 300, and I'd get assigned on 100 shares per contract. So 300 shares at 310, but that's totally fine because I want to ride this thing back up. It's a solid company, and I think they will benefit from rate cuts. Okay. So what I'm doing is I'm going out next week, 310s. Obviously, this is just what I chose to do. I didn't pick up $485, but if I sold this put today, right now, I'd pick up $485, which is a potential 1.8% ROI in 1 week. Okay, so very good returns there. Results vary based off where the stock's at. I would still do this, and I'm probably going to do this trade again. I'm going to add one more contract next week because I'm so confident in American Express at these levels. Okay, these are levels I haven't seen since the tariffs crash. Okay, so I'm looking to get in and build this position up. We're almost oversold on the RSI, and that's a perfect, we haven't seen that since the tariffs crash. So really liking AXP, solid company. But overall in the markets, this is when you have to take advantage. You can't get scared. You have to, if you follow the VIX cash allocation, then having cash for these opportunities is great because this is where the real money is made. And in fact, I think this is one of those crashes where, hey, if we do head a lot lower on QQQ, all right, maybe we roll over quite a bit, maybe all the way down to 550, 552, which again, that would be pretty extreme. But if we did, that would give institutions another reason to say, hey, retail has been pushing up this whole trend. We've been sitting on the sidelines. This is our time to buy and get in before retail, because retail's all selling and taking profits. Okay, so that's kind of why I'm looking at these areas to really double down. And this would propel us into a fresh Christmas rally. I'm sure President Trump wants the market and everyone to be happy. After we see this crash next week, going into the new year, perfect Christmas rally, awesome. And then 2026 is just kind of an uptrend from there. So I hope you enjoyed this video. If you did, give it a thumbs up, and I'll see you in the next one. Take care.